Bismillah, alhamdulillah, wa salatu wa salamu ala rasulillahi wa ala alihi wa ashabihi ajma'in. A'udhu billahi min shaitanir rajim. Bismillahir rahmanir rahim. Rabbi shrah li sadri wa yassir li amri wa hlul 'uqdatam min lisani yafqahu qawli. I hope all of you are feeling good, nice and enthusiastic towards the lecture. And I hope the lecture is interesting and enthusiastic for you. Dear students and fellows, as we have been discussing corporate governance in the previous classes, we have discussed some of the principles of corporate governance, the core attributes of the corporate governance for a proper corporate governance system actually. We said that the four main characteristics have to be part of the corporate governance. For example, all dealings and treatments should be fair and equitable. Transparency has to be there, and there has to be well-defined roles for managers and directors. Their responsibilities have to be identified, and there has to be identifiable and measurable accountabilities in the organization. We have discussed form of business. If you remember the three basic types or forms of business: the partnership, sole proprietorship, and the corporation. And these are the definitions. We do not need to talk about them because we already talked about it. And we discussed the corporation, some of the major differences with some of the major responsibilities and the conflict of interest that is involved in these three types of business. What actually matters to us is that the corporation is actually a very broad business where the rights can easily be transferred, where it is separated from the shareholders are different from the owners are different from the business, and other characteristics that we discussed. We discussed that the board of directors, which are on the top board of directors, are different than the shareholders and the managers, and board of directors actually work as a medium between the shareholders and managers in order to solve the problems and to monitor the managers and to control the shareholders. And we discussed some of the conflicts that are taking place, responsibilities of board of directors. We said board of directors have to be assigned with certain responsibilities. They have to be accountable for whatever their duties that they have been given. And there has to be proper selection for the board of directors. They have to be qualified in whatever organization or corporation they're working, and they have to have regular elections, maybe like 3 years. The board of directors have 1 year, and up to 5 to 10 years. And there has to be assessment for the board of directors. Also, we discussed the principles of the Monetary Authority of Singapore. They had about 13 principles that we discussed, and they were interesting because they involved all the necessary aspects of the proper corporate governance. And we discussed that environmental, social, and governance factors in a corporation, ESG, that the environment has to be pure, clear air. The business that we actually do should not make the city polluted. There has to be understanding of the disclosure. The social responsibility has to be taken place in terms of the consumers, for the community itself, and for the for the shareholders. And effective corporate governance should take place. And we took a few examples of, for example, the legal risk, reputational risk, operational risk, and financial risk that is involved if the ESG is principles are violated. Okay, so we talked about valuation implications of corporate governance, the benefits, the risks are accounting risk, asset risk, liability risk, strategic policy risk, and if the corporate governance was weak, then there could be accounting risk, losses in accounts, or the information provided in the financial statements that would not be fine and would be misleading and incomplete. We will be talking about financial statements in our next in today's lecture later on. Asset risk could be involved. We could be losing the assets or misappropriately used. The assets would be used. Liability risk, there could be losses of the liabilities, and strategic policy risk, which is a policy level thing. And the benefits are very, very, very vivid, quite vivid, that strong governance lead to investment opportunities, attracting talented board of directors. It leads to taking proper decisions, and we took the summary about it as well. In the next part, we talked about management levels. We talked about three main management levels: the top level, the middle level, and low level management. We said that the top level management includes the CEO and board of directors. Since this has a linkage to the previous lecture, that's why I gave you a snapshot of the previous lecture. And the top level management has a very important role in hiring or selecting the key personnel for the organization. For example, even sometimes the CEO, the vice president, the heads of important departments, or CFOs, chief finance officer, and these people are hired by the board of directors. They usually provide policies. The middle level management includes IT. It includes IT, production, HR, VP, CFO, and etc. They actually make intermediate and long-range plans for the organization. They actually talk about the promotions, departmental policies, changes, and etc. While the lower level management actually supervises the organizational operations and work. So they rather focus more on the day-to-day activities, day-to-day operations in an organization, or they actually implement the plans which came by the top and middle level management. So middle works as the intermediary between the top and the low, and low works as the people who are actually on the ground doing actions, performing the work on real basis. Now we talk about managerial skills. Now you see there are managerial skills that we could talk about it for minutes and hours, but what we need to discuss in today's lecture that is a part of our course are the technical, human, and conceptual skills. These are the main managerial skills actually. The technical skills, we say, it involve the technical aspects. Conceptual is different than the technical then. But the technical actually involves the techniques, speciality of a person in the particular field. Human skills are skills that involve actually ability of managers to work and coordinate with others, motivating them, or for example, solving the problems of human beings. So it is more of taking a problematic aspect, solving the problem solvers, or actually having the human skills. Conceptual skills actually involve people who are thinking, who are making plans, policies, and who understand the problems easily, who can make judgments, and etc. So if we come to this, we would understand that the first line, the top level management, they focus their most focus is on conceptual skills. If you come here, the conceptual skills are more of the focus for top level management. بخاطر که یا زیاد فکرش در همین مسائل مورد دفتر و ارگانیزیشن و کارپوریشن فکر زیاد میکنن که مثلا چه قسم ما پالیسی جور کنیم، یه چیزای کلان بسیاری فکر میکنن. کارهای به اصطلاح هیومن را عموما میمانن به میدل لول منیجمنت و تکنیکال میمانن به لور لول منیجمنت. دیگه تاپ لول منیجمنت فوکس زیاد داره کنسپچوال است، میدل سر هیومن است، همین فیصدیش است به اصطلاح. اگه بگیم که 60% ای شد و فور اگزامپل 30% ای شد و 10% ای شد، هم شاید مبالغه نشود. ایرا شاید بگیم که 10% و 60% و 20%. هیومن سکیلز هم میدل لول منیجمنت مردم را تنظیم میکنن و از با کار میگیرن، مشکلاتشان هم میشنون و حل میکنن و لور لول منیجمنت که هست و هیومن سکیلش و کنسپچوالش بسیار کم است، شاید تا 10% و 8% و این تقریبا تا 20 و 60 و 70% یا فوکسشان سر کارهای عملی است، تکنیکی است که دو اسپیشالیتی داشته باشه، کارهای میدانی است. به این خاطر دیگه یک دیگه this is the other table chart that could help us. Conceptual human skills, you see technical skills, so it is similar to the first one. In the hypothetical organization chart we have board of directors on the top, then the CEO comes under the board of directors. Most of the time the CEO is reporting to the board of directors, and then the COO, chief operating officer, is working under the CEO, and this is a CFO, chief financial officer, that works. So this comes here. Then you have treasurer, controller, or maybe heads of departments, and each and everybody has people underneath them working. So that chart could be a little bit different, but the concept is very important to understand. Now we come to our main topic, is the financial statements. Now there is a question, what financial statements are. You see, an organization, besides working on conceptual part, technical part, and human part, it also works on financial part. This financial part is actually more of when developing financial statements. The first you need to have conceptual skills, and then human skills, and then working on the ground in income statements, balance sheet, and cash flow statement that we will be discussing in coming lectures. So now, in order to solve the question, we need to understand that financial statements are actually the way we record and convey the business activity, and we make we focus on financial performance of a company. That is actually financial statements. So these are actually the written records in which we deliver our activities, our performance of the companies to other people. For example, the external parties, most of the time, they're looking for the financial statements to understand your income statement, your balance sheet, in order to invest in your business. So that's the first part. So the first part, the internal, for example, top-level management focuses on the financial statements, but also the external team, for example, the investors who are investing into your business, or even the government, also looks at your financial statements in order to make decisions about you. It affects all parts. It affects your investment. It affects your tax policy. It affects other parts in all the in all the stuff that is part of your organization. Because the more the financial statements are stronger, the more your business is successful, and the more people come to your business, the more your business gets credit, right? So these are actually records of financial activities that you perform. You purchase things, you sell things. You actually, for example, provide salaries to or pay salaries to your employees, or, for example, workers. And you do a lot of things. You make contracts, you sign letter of memorandums, you pay people, you receive payments, and that's all. Like you do all the thing. You purchase a building, you purchase a house, you purchase land, you purchase vehicles, anything you actually where you pay, where you receive, which deals with the payment. You have to deal with financial statements there. So financial statements are actually the finance department of an organization works with all departments in budgeting staff, in paying for the companies, in procurement, in a human resource department, in business department, in research department. All departments require financials or payments to invest. That's why in the financial statements for all departments, the expenditures they have made, the salaries they have paid, the things they have sold, the things they have purchased, it has to be on the record of financial statements. Now, the three main financial statements that we'll be dealing in corporate finance are the balance sheet, income statement, and statement of cash flow. I wouldn't be going into the details of each and every one. Usually the income statement comes first. Don't worry about the order, because in income statement what you do is you record your profit and loss. You see where you are, whether you are going in profit or you are going in loss, right? Because it shows you profit and loss, and it is done at the end of a period that you are defining. We will be talking about it later on. You see, we actually write all the expenses we had. We write these revenues that we had, and then we do the plus minus, and then we have the records. Balance sheet, on the other hand, that it actually provides a snapshot of your financials or the position of your corporation to others. It involves the assets you have, the liabilities you have, and the current or the long-term liabilities, the current or fixed or etc., the capital that you have in organization. So all about this thing has to be part of it. So in balance sheet, usually the two sides that we'll be discussing later on should be equal. And the last one is this cash flow statement. Some people call it statement of cash flow. Sorry. It actually shows the cash that comes to your organization, the cash that goes from your organization, and actually it talks about the movement of cash, right? The movement of cash. So the movement could be the inflows, the movement could be the outflows. You pay cash, you receive cash. So that's all the flow. That flow has to be involved in cash flow statement. So we go to further descriptions of the financial statements. We said financial statements are a record of the financial activities of business. In balance sheet, we deal with assets, we deal with liabilities, we deal with equities, right? The capital. In income statement, we deal with revenues. You see the difference. We deal with expenses, and we deal with whether we are on the loss side or the profit, where we are on the net profit or net loss, right? Because there is gross profit, and then you deduct your all expenditures, and then you see how much, whether you are on the profit, the good side or the bad side, the profit side or the loss side. The statement of cash flow, it deals with the operating, investing, and financial activities that we will be discussing it in the coming slides, inshallah. The first one that we will be talking about is the income statement. You see, in the flow we have in an accounting subject that we usually have discussed that, it's the accounting cycle. It actually starts with a different perspective that we discuss. For example, let me draw you a chart in order to let you understand this. So you see, this is basically the accounting cycle that we can talk about it. In the accounting cycle, we basically provide initial posting. In the initial posting, we make initial posts into journal, where we record daily transactions or day-to-day transactions, or recording in journal, debit and credit and all of that stuff. So we initially post them, we record them, we classify those transactions into ledger. We create various or different accounts for each financial. So in ledger, we basically classify the transactions, and we separate them into different accounts, which is also called posting, classifying or posting, right? While we make the different accounts for each and every one. From the basis of the accounts, we now create a trial balance, right? In the trial balance, we collect all those accounts into a list and check the accuracy of the account, whether the accounts are accurate or not. So in trial balance, basically we see the debit and credit side, and we record all those accounts separately and see whether both are equal or not. Now, after trial balance, we will be leading to income statement. In income statement, we see whether we are on the profit side or we are on the loss side. That is very much important for us to understand, right? We see the both sides. We record the sales. We see the inventories. We see the direct expenses that have come. We talked about cost of goods sold and operative expenses if available, administrative expenses, and some other expenses. And then we see in the what side that we are in income statement. After income statement, we develop a financial. We see the financial position through the balance sheet that we are developing in our financial statement that we have. So, coming back to our lecture, in the lecture, we talked about income statement to discuss, right? We will be discussing income statement. The income statement is also known as profit and loss statement. It is actually prepared at the end of a year, quarter, semi-annually, annually. That doesn't matter. It depends on the corporation's policy, and it will show to us that the organization that we work at, or the corporation, is it profit or loss. So it basically focuses on three main things: the revenue, the expenses, the income, and the losses. So this is another way to discuss the identification and the recording, communicating, analyzing the data, then identifying business activities, recording business, communicating the activities, and then, for example, we do identifying while recognizing the transactions, the business transactions, then recording them into journal, classifying them, then and in ledger, summarizing them, for example, in the income statement, and then and balance sheet, and interpreting them using the reports that we have. And we do this for external users, lenders, consumer groups, and etc., government and customers, for managers, internal auditors, sales team, and the people who use our data, maybe the marketing, financial statements, the management, human resource, finance team, the internal users could use it in the organization, external users, the investors, the tax authorities, the customers, labor unions, and etc. So this was about some of the financial statements information. And coming back to the slide, as we said, it covers revenues, expenses, income, and losses. So in revenues, all sort of income that we receive, if that is from a sales receipt, invoice, bills, commissions that we received, or the discount we received, all are part of the revenues that we have. And expenses are actually the costs of the goods and services that is used in the process of earning the revenue. You see, the expenses revenue has a relation. All those expenses comes on the revenue is actually the expense. The salary, wages, rent, lease, or office expenses, all are part of the expenses. The operating expenses, on the other hand, are actually the expenses that incur for running the business, actually, the staff wages and office supplies, for example. And while talking about the prepaid expenses that could be part of the income statement, that represent the value that has already been paid for. For example, we paid for insurance, we paid for advertisement, we paid for contracts, and we paid for the rent. So that's the prepaid expenses. The expenses that we have already paid in advance, right? For example, contracts is for 1 year, we pay at the beginning of the year. We do not pay at the end of a year. So that is actually paid. In the next slide, we will be discussing on the two parts of income statement examples: the single-step income statement and the multi-step income statement. In an example, we will be taking a look into the trial balance and make an income statement out of it. So in the first phase, we talk about a one-step income statement. You see that's, for example, let's say an ABC company or corporation for the quarter ended at 13th of 6, 2015, right? So in the single step, you see only revenue is available, and we have sales and revenue. For example, that is a total of 103, Then we actually added the expenses. After the revenue, the cost of goods sold, that is, for example, 40. Then we have the cost of goods sold, means the cost that has come on the goods that we actually have. Then the selling, general, and administrative expenses, the salaries, everything that actually is 15. And then we have interest expenses, that is 6. So you see, we have like 103 total, and in 103 we have deducted the 40 for example, the cost of goods sold, 15 for example, the expenses, including the selling, general, and administrative expenses, including the salaries, and we have deducted 6 for interest expenses on bonds or loans. We have a total of 42. So 42 is actually a net income or profit for us, right? So that was actually a single step. So we had the revenue collected, the sales, for example, ما با 100 روپا چیزا رو فروخته بودیم، 3 روپا سود سرش گرفته بودیم، 103 شد. 103 خب ما به اصطلاح عاید داشتیم، اما چقدر مصارف که سر زمین چیزا آمده، ما که داشتیم مثلا 40 روپا از cost of goods sold بود، چیزایی که فروختیم سر زو مصرف آمده بود for example، و دیگه expenses، مصارفی که ما داشتیم، معاشات و دیگه مصارف که ما داشتیم، و دمو interest که گرفتیم سر زو $6 مصرف آمده بود که از 103 رو ماینس کردیم، تقریبا 42 روپا. ما شما یا با اصطلاح اگه بگیم 42 لک اگه بگیم هم مشکل نیست، به خاطر اینکه که ما بفهم که حسابات کلان بود دیگه، ما با او اصطلاح یک چیز آله 42 نت اینکم اور پروفیت داریم. خب بعد از این ما سر یک مولتی استپ اینکم استیتمنت کار میکنیم. در این اسکرین شما یک مولتی استپ اینکم استیتمنت میبینین. یک دفعه که همین سایزش خورد کنیم که با شما نمایان باشه. اگه اینجا شما میتونین که ببینین یک مولتی استپ اینکم استیتمنت که ما شما ببخشین اول خود ترایل بالانس است، بعد اینجا مولتی استپ است. مثلا در ترایل بالانس ما اکاونت داریم، قسمی که گفتیم we create a different we actually list all those things which were with us in the ledger, and we bring them here. If that was the debit side account, we put it in the debit side. If that was the credit side, we put it in the credit side, in order to see the accuracy. For example, we had cash for 10,000, 3,000 for the accounts receivable. We received money from someone, the prepaid insurance that we already paid for, insurance, inventory, the stock, the equipments that we purchased, and for example, accumulative depreciation, we depreciated some of our equipments. Account payable, we were payable for somebody. The wages we paid, for example, the common stock, the stocks we had, the sales revenue, and then the cost of goods sold, the wages expenses, and the utilities expenses, depreciation expenses, insurance is the expenses for the depreciating یک چیز که استهلاک میشه به او خاطر مصارف بود و به خاطر اینشورنس است و به خاطر اینترست است. این توتال میشه. این ما قسم کلکولیت کردیم که مثلا این را سم کردیم، همگی را یک جای کلکولیت کردیم و بعدا باز توتالش که گرفتیم اقدر کردیم ما توتال آمد و بعدا کردیت ساید هم به همی فرمولا را اپلای کردیم که هر دو ساید را همراه ما مساوی برآمد. حالا دیگه ای this was an income statement with us. Now we would like to see while we put this income statement in an trial balance, in an income statement, what do we have, for example, right? So this is a income statement, a multi-step income statement that we have with ourselves. We have already wrote the چون ما تخته نداریم دیگه به این خاطر ما عملا اینجا سوال حل کردیم تا بر شما واضح شود. For example, the first part is the sales revenue, right? As we discussed that we have sales on the first side, and then within sales we have the revenue, then we have the sales in it, income statement. So in the sales we have, for example, the revenue for 26,590, let's put comma in order for rounding and etc. Then in cost of goods sold, the overall sales ما جزوی هر یک جدا نوشته نکردیم اما به خاطر اینکه که یک understanding باشه cost of goods sold بعد از این میاد cost of goods sold چی میشه از این ماینس میشه دیگه cost of goods sold ما ماینس کردیم که تقریبا 12000 میشد این ما می فرموله را اپلای میکنیم تا که بر ما شما آسان شود این ماینس همین که در قوس آمد ما میفهمیم که این ماینس میشه بعد از اون ما گراس پروفیت داریم یعنی بسیار ساده است که این ما که از این ماینس کردیم از این ماینس شد دیگه امرای ما آمد 14590 صحیح یعنی شما دیده میتونین یک دقیقه که میرم ما یک دفعه ترای کنم 590 منفی بسیار شما میبخشین یک دقیقه 26590 ماینس 12000 14590 میاد دیگه این کت ما به اصطلاح امو پروسه ماینس ما شما انجام دادیم این از این ماینس کردیم خب after that we talk about the gross profit that is the gross profit وقتی که cost of goods sold از sales و revenue ماینس کردیم gross profit کتیم ما شما یعنی مصارفی که فایده که از او به اصطلاح خالص فایده نیست مصارف از او نبرآمده so این فایده خالص نیست ناخالص است به اصطلاح now we talk about the operating expenses for example the wages expenses the utilities expenses and the depreciation expenses all are written here so all these are for example when we have added them up وقتی که جمع کردیم 5630 روپیه شد total operating expense وقتی قسمی که ما اینجا گفتیم که کلگیشون operative expense هستن after this we see the operating income here operating income ما شما میبینیم که همو اینکمی که the operation ما انجام میدادیم همو اینکم بر ما شما که به دست ما شما آمده درست است دیگه we also wrote that here the operating income right it's also written here now how did we get the operating income that is very simple what we did is that we actually took this added this the total operating expenses and we added it with the gross profit right وقتی که امی هر دو را یک جای کردیم ما operating income رو به دست آوردیم امی فرموله است به این operating income شد که 8960 روپیه میشه now the interest expenses as we discussed we had interest expenses here you see here interest expenses so and the interest expenses is a negative thing for us because we pay for those expenses we have the income before income the income before income tax right the income we received before the income tax that we applied now how did we have this you see we have actually added up these two in order to have the income before the income tax yani پیش ازی که income tax شا پی کنیم این اردویش که پلس کردیم امرای ما آمد چی آمد امرای ما ای اماونت آمد یعنی ای دو دانه پلس شد اردویشان جمع کردیم ای آمد و وقتی که income tax expense سرش اپلای شد سر زمین این چه قسم اپلای شد اینجا ما یک 10% داریم از این tax rate 10% tax rate سریزی اپلای کردیم که ما آمد چی آمد ای مقدار آمد یعنی سریزی که 10% اپلای کنیم مثلا اینجا ما شما میبینیم میره عملا ایره ضرب 10% وقتی که ما شما بگیریم چون اینجا تقسیم نکردیم باید تقسیم 100 هم شود تقسیم 100 ببینین 799 میاد دیگه this is how it works now we have the net income how did we derive the net income and that is very simple what we basically did is we actually made this less than this right this is how it works you see B20 minus B21. Very simple. In order to get the net income, this one minus this one. This is a very easy technique. Or we do what? We put minus, we put this minus this one, and we close this, and we have the results there. So the reason I worked on income statement in Excel sheet was because, you know, in the current world, people usually do not work a handy thing, right? But this زیاد مردم کار نمیکنن، به خاطر اکسل بسیار ساده هست. مثلا در هر جای ما از فرمول استفاده کردیم. اینجا میبینید این خو اماونت فیکس اماونت است که ما ایره گرفتیم. باز ما چی کردیم که ایره از این ماینس کردیم و ما شما ایره داریم. تحت خود مثلا 14590. بعد از او ای wages expenses از operating expenses میاد. مثلا باز ما چی کردیم که ای هم فیکس است و باز کلگیش پلاس کردیم total operating expenses ای کلگی total operating expenses اینجا رساندیم. مثلا operating income قسمی که گفتیم که مثلا ما چی کردیم که ایره خود ایره و کتی بالا کتی ایزی gross profit پلاسش کردیم که ما operating income گرفتیم. صحیح؟ و ضمن interest expenses کتی ما هست و چون income before income tax هست که IBT برش میگه که ما چی کردیم. What we did is we actually added up these two values in order to get income before income tax. وقتی که income taxش apply شد سریزی باز قدر پیسه آمد. یعنی بعد از tax که apply شد ما اقا income tax expense داریم و ریتش اینجا معلوم بود که 10% کتی ما بود دیگه. او را مستقیما هم میتونیم که ما شما ایره بگیریم و سرزو ضرب کنیم و تقسیم 100 کنیم و این قسم هم میشه که از طریق کالکولیتر و اینجا جای با جای قسمی که بیشتر صحبت کردیم که ایره ما گرفتیم ضرب 10 کردیم و تقسیم 100 کردیم. این یک طریقش هست. مثلا دیگه طریقشی هست که ما ولیو را بگیریم 7990 مثلا تقسیم ضرب 100 تقسیم ضرب 10 تقسیم 100 یک قسم هم امر ما ولیو میبرای. So these are all techniques that we use. net income چه قسم گرفتیم که این دو ولیو را کتی یک دیگه از یک ای از این ماینس کردیم تا که ما net income بگیریم، به خاطر که total value income پیش از tax است. کلگی expenses که ما حساب کردیم باز ما قدر اینکم داریم و از او تکس ماینس نشده بود، مصارف تکس ماینس نشده بود. او که ماینس شد این به این اندازه امرای ما شما نت اینکم ما از در نت اینکم است. مگر در نت لاس باشیم هم او یک جدا گپ است و این هم طریقش بسیار آسان است که این ولیو را میگیریم ماینس این ولیو را میگیریم و اینتر میزنیم. این یک طریقش است. دوم طریقشی است که ما ماینس میزنیم، مثلا قوس شروع میکنیم we write this minus this value, we close the parentheses and then we do it. So these all are ways. or مستقیما ما میتونیم که مثلا بگوییم در اینجا یک کالم که نوشته کنیم که 7990 minus 799 and we have the value again. So these are all techniques. In for right now, Excel is a very good format for income statements. If you have QuickBooks and other applications, that would also be of help for you and for all of us. Otherwise, we can work in Excel and QuickBook. So that was a multi income statement that we discussed. So that was actually a multi income statement. Multi-step income statement. We talked about a single step. To make it very easy, we discussed financial statements. We talked about income statement, balance sheet, and statement of cash flow statement in general. We then said that income statement involves revenues, expenses, and profit and loss, while balance sheet involves assets, liabilities, and equities, and statement of cash flow involves operating activities, investing, and financing. We talked about income statement. We talked about the revenues. It involves expenses, the operating expenses, the prepaid expenses. We talked about a single step income statement, which was very easy for us to put the revenues and interest and the plus and the minuses that we had, and we had a net income. And we discussed in income statement in detail here with all those specifications that were required. So you can make one for yourself in Excel. I will be sharing these files as well with you, and inshallah, if you come across any problems, inshallah, I will be there to answer your queries either through your WhatsApp application that you have or through the LMS. You can take my number from Tawhid Isaac. In the next class, we'll be discussing balance sheet with some specific examples, and then we will be discussing cash flow statement, inshallah, if we had time, and then we will talk about other parts of the formulas, bond valuation in other lectures, inshallah ta'ala. Thank you for your time, and assalamu alaikum wa rahmatullahi wa barakatuh.